Welcome to today's lesson. We got some really exciting things to cover. We're going to cover Fibonacci, Elliott waves, how it applies to Bitcoin. We're going to do some live analysis so you can get a better idea of what is the price action likely to do next so you can act in accordance to your personal plan. So let's jump straight in to Fibonacci and Elliott wave. Most people don't understand that Elliott wave theory and Fibonacci theory really shows us the mass psychology of the markets, and that can help us determine what's likely to happen next. I want to read you this. Coincidence of time, price, and pattern. Trend change is highly probable when a market trades into a time, price, and pattern zone. And I'm going to show you that in Bitcoin right now because there's a lot of news out there, positive, negative, fear of missing out, fear, uncertainty, and doubt. And it just really distracts people from what's really happening. And this actually bakes the news into the mass psychology. So with Elliott wave theory, the markets represent the process of mass psychology, which grows and contracts in a fairly predictable and identifiable patterns. So I'm going to cover that with you. We're going to do a quick recap as well, just so you're really in tune with what the markets, how they tend to behave. And it's not just Bitcoin, it's all markets where there's many people involved. And when it comes to Fibonacci ratios, what most people miss, because they only do the basics, but if you combine it with Elliott waves, it's a whole different level. So Fibonacci ratios is a series of ratios related to the root ratio of 1.618, also called the golden mean or divine proportion. And this part here is key. So really this part, these two lines here, these are the most prevalent ratios found in all forms of natural growth processes, including the process of mass psychology. Right, so Fibonacci ratio is all about the representation of mass psychology. So if you like what you're going to see next, if you're liking it, click the like button, subscribe, click the bell notification, because I'm going to do some regular updates on Bitcoin, especially when they're reaching really key time, price, pattern, or momentum zones. So let's jump straight in. But before we do, if you have never met me before, I'm Jagir, the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. And I was also featured in the best-selling book in 2008, High Probability Trading Strategies. I've been trading Forex for over 10 years, and I've been doing a lot of crypto over the last few years as well. And I'm going to apply that knowledge in what you're going to see now. So let's do a recap of Elliott waves. Now, if you're not familiar with Elliott wave theory, it typically moves in 5 waves. This is every market, Bitcoin, Ethereum, all other cryptocurrencies, and you can apply this to get the best entry point and the exit point with your strategy on the time frame that you work with. So it typically moves in an impulse wave, wave 1, a correction wave, wave 2, the biggest and longest impulsive wave, which tends to be a wave 3, the next correction, which tends to be a wave 4, and then a final impulse wave, which is a wave 5, and then typically you get a 3-wave correction called an ABC. Now the thing I also want to cover, because it's going to be helpful in today's analysis, because we're going to go into where is Bitcoin today in accordance to Elliott wave theory and Fibonacci, and what's highly probable, right? It's not guaranteed, but it's highly probable that allows us to act with the edge in our favor. Wave 1 tends to actually break down into 5 waves of a lesser degree. Wave 2 tends to break down of a minimum of 3 waves. Wave 3, which is going to be important for today's lesson, breaks down into 5 waves, and wave 4 typically breaks down to a minimum of 3 waves. And last but not least, wave 5 breaks down into 5 waves also. So where is Bitcoin right now? Well, based on the analysis that I'm going to show you, and I did a video last week as well, Bitcoin seems to be at a wave B of a wave 4. And I'll show you exactly what that means. So this was the analysis that I did last week. We're just showing, and I wrote this in a few of my reports, that if I just bring up the laser here, looks like Bitcoin's doing a 1, 2, 3, and then there's a subdivision of 5 waves with the wave 3. And then typically what tends to happen, as you saw in the Elliott wave patterns, is a minimum of an A, B, C correction. Now I'm going to apply some Fibonacci ratios, not just random Fibonacci ratios, but the ones that tend to apply most to a wave 4. Then we're going to do a bit of time analysis. You can do Fibonacci time because corrections tend to take a typical amount of time. So I'm going to do that for the wave B high. I'm going to show you that in detail. And then you can have a really clear idea on what's likely to happen next. And then we'll just see how the market unfolds. But it's designed to help you make better decisions. So how is the market looking today? Literally, I took this snapshot not that long ago. And as you can see, the wave, this is what we saw earlier in the previous slide. So I'll just show you this again. And now it seems to be forming this wave B. So that's what I want to pay attention to today. When is a wave B likely to end? And how can we predict that with high probability? And then what's likely to occur next? Because look, there's going to be news. Fear, uncertainty, doubt, fear of missing out. All of that comes out. There's positive news announcements, negative news announcements. And people always try and, kind of try and figure out why is it going up, why is it going down, and they try and go on-chain data, this person, that person. Look, short term, the markets are determined by voting, which is determined by buying and selling. And it's all mass psychology. So this is what's likely to happen next. So let's go straight into our live chart. I'm going to pull this up and make it really, really clear and evident for you. So if I just pop out of this. Right, so now I'm using TradingView. There's a free version of TradingView, so you can actually play around with this. So what I want to do is just do this analysis again, just so you get familiar with some of these basic projections and retracements. So first off, we got this wave 3 here. So the wave 2 low down here, going up to a wave 3. So typically, let's do our wave 4 retracements. So typically a wave 4 retraces to 32.8% retracement, 38.2% retracement, to a 50% retracement. So if we just find this low of a wave 2, we click it to a wave 3 high, or it looks like to be a wave 3 high. Just make sure I get this high. So now we have this price target, right? That just shows a wave 4 typically will correct, if this turns out to be a wave 4, at 43,000 per Bitcoin or 37,000 per Bitcoin. So now we have a bit of a price target, right? Price target. Now we want to look at what is happening over here. A wave A, this could be a wave A, a wave B, and then a wave C, which will typically end the wave 4 correction. But what I want to look at now is this wave B itself. So I'm going to actually jump into a lower time frame. So if you're not familiar with charts, these charts, every bar at the moment represents 1 day, 1 day. So you'll see this D up here in the top left-hand corner. That D stands for day, 1 day. I'm going to drop down to a 4-hour chart where 1 bar represents 4 hours. Why? Because the pattern of wave B will be much clearer. And I want to tell you what typically a wave B looks like. So I'm going to aim to keep it nice and simple. So now we're in a smaller time frame. This down here is what we're referring to as a potential wave A. And typically a wave A breaks down to 5 subwaves. A wave B typically breaks down into 3 waves, an A, B, and a C. And it looks like, and I'm going to draw this here so it's crystal clear. It looks like it's an A, B, C forming of a wave B. Now what I want to do is just do some really cool analysis that will show you where's the likelihood of it ending a wave B if it turns out to be a wave B. As long as this high doesn't get taken out, it looks like it's going to be very likely. And then what we should anticipate next. So I'm going to zoom in so it's really, really clear for you to see. All right, so we're going, this is a wave A, and now we're seeing and then trying to anticipate where is a wave B likely. So a wave B typically is 50 to 78% retracement of a wave A. So if we just change this from the 32 to a 76, 78.6, that's typically the price zone from a Fibonacci perspective where a wave B would end. But here's something really cool. 2 things that most people don't know, and I'm going to give it to you for free. One is we can do some time analysis. And a wave B, the time it takes for a wave B to complete is as a minimum normally for 50% of the time it takes to do a wave A. So this time here, the time it takes to do this wave going up to down here, if we project 50% forward, that's typically the time retracement as a minimum. And if it hasn't reached that minimum, we can be quite confident that it hasn't corrected. So this here, if I just click on here, the maximum tends to be 100%, which is what's represented by this 1. If I just click the 0.5, which represents 50%, Now we have this really clean price and time zone for an end of wave B. Now I'm going to go a bit more advanced today because I think you're ready for it. A wave C high, which is this here, this A, B, C of a B, typically the wave, this last part is typically the same as this part here in both time and price, but we're just going to focus on price for a second now. So I'm going to project forward, measuring the low of this wave A, and then projecting it forward from this wave B low. And then what you'll see is this is 100% price extension. So now we have this really clean zone of time and price. So the likelihood is what we will see, and if it turns out this way, it just allows us to make better decisions. So that typically is, we should see a zone around here somewhere. Right, so now we have a really clean time and price zone where Bitcoin may make a temporary high. It seems to be around the 60,000 mark. And 60,000, just as a side note, you know, because it's got lots of zeros, the more zeros is referred to as a round number, and that also tends to be a psychological resistance zone. So can we get even more precise, really precise? Well, yes is the answer. And I hope this makes perfect sense to you, because this is really, it's high level, but I want to keep it simple so you can apply it, so you can start seeing these patterns, not only in Bitcoin, but other cryptocurrencies, because it all represents mass psychology. And the markets are pretty much determined by fear and greed. And that's really important to know. So wave C, this part here, this part that we're looking at, this final wave here, typically breaks down to 5 waves. So if we can go to a lower time frame where every bar represents just 1 hour, more often than not, the pattern becomes clearer on a lesser degree, on a smaller time frame. So what we're going to do is we're going to jump down to a 1 hour chart. So I've just clicked up here, it says 1 hour over here. And we've got the same, this is literally the same chart pattern. But we're going to zoom in on this part of the chart, so we can really get some detail. Now, it is possible that this is the high, but because it hasn't got close to this 100% price extension, it typically is up here. So what looks like is happening, and let's just have a look over here. Potentially is a 1, 2, 3, 4. It hasn't confirmed the 4, but it looks like it's doing a 4 down here. And then what tends to happen is a final 5, which will be similar to the wave 1. And then it will take us into that zone. Now, it's not guaranteed that will happen, but it's more often than not. And if that's the case, we can actually do a price projection, 2 levels. One is, when will this low of a wave fall? Now, look, if you're trading Bitcoin on a micro time scale, which I don't necessarily recommend, this is really valuable information. But as Bitcoin really determines or indicates what the rest of the market is doing, this can be really, really valuable, and you can anticipate and prepare and be confident on what's happening or what's likely happening. So let's do the same retracement as before, which was, we want to see what's the likely end of this wave 4. Remember I said wave 4s typically are 38.2, which is this, to 50% retracement. So you can see it's in that zone. Now I've got a few lines here from before, so I'm just going to get rid of those. So it's like a perfect wave 4, and as you can also see, it's like A, B, C. So that's forming a perfect wave 4, if it tends to be. And if this high gets taken out, that will confirm this wave 4 low, and then we should see this wave 5. So let's just assume that is a wave 4 low. We do need it to be confirmed by a previous high being taken out. Then let's project forward the price projections for a typical wave 5. And then if these time and price zones get hit on multiple degrees, on a higher degree level that we saw on the daily chart, and now we're looking at the micro scale with a small degree of a wave 1, 2, 3, 4, 5 of a wave C, then it's a highly probable resistance zone where we might see the beginning of a downward movement in Bitcoin. And then we can kind of anticipate where it's going. So let's just do typical wave 5. So typical wave 5 is measured from the wave 1 low to the wave 3 high. And we're assuming, just for this exercise, that this is going to be the wave 4 low itself. And what we're projecting forward is the typical wave 5 extensions. The wave 5 extensions are, the minimum tends to be 68 or 61.8%, which is represented by the 0.618, and the maximum tends to be 100%. So now we have this really tight zone, which is of multiple degrees. We got this zone, we got this time zone. So now we can be fairly confident that the Bitcoin may reach a high around this $60,000 range. And then if it does, once it unfolds, it'll become clearer because we can break down the wave 5. And then we can zoom back out on a daily chart. Let me just reset this to go, okay, if that's the case, then this is what we were looking at before. What will tend to happen next? I've drawn it previously here. It'll probably be a bit sooner now that we've got more information, is, if I can get this up here. Minimum of an 8. Maybe if you see a wave B high around here somewhere. And then typically a wave C will tend to be very similar to the wave A, which is this here. So if we just mirror it, give or take, it's around this zone here. So then we can anticipate, if I just bring this over, us getting a correction, Bitcoin moving sideways to down until the middle of May, maybe the 17th to the 20th of May, give or take. But as we get more information, and if this does start forming, we can do a more up-to-date analysis and get really accurate time and price zones. So when we're zooming out, typically a wave 4 low tends to be in the previous wave 4 range. So this marries up perfectly. We've got the 38.2% retracement of a wave 3 that makes a wave 4. We got this first initial wave A, what looks like a wave B. Now it might go on to make new highs straight away. That's really, really possible. But just putting the probability in our favor, we should go by a wave C high over wave B and then a correction. So I know we're talking about a lot of waves 1s and 2s and 3s and 4s and 5s. But this is typically how the markets tend to unfold over and over again. So I'm going to keep an eye on this. If it does form a wave B high and the wave C starts forming towards the wave 4 low, I will do another analysis so you can really prepare. Really what I'm looking for is if this low does occur, this wave 4, what comes after a wave 4? There's a wave 5, right? There's a wave 5. So then we'll just get that final impulse wave that takes us into the latter part of this year. And in crypto, especially with Bitcoin, more often than not, that last phase of the wave 5, we tend to get panic buying, and it tends to be a wave 5 blow off, which is some really good gains that can be made, and then we'll tend to see the bear market take its effect, which will probably be the latter part of this year. So if you found that helpful, like, subscribe, hit the bell notification. I'm gonna do videos when it's hitting pivotal moments, anything of interest. Now we're doing a possible wave B high before it goes to a lower low, because now people are talking about, Bitcoin's going to continue surging up, which it may do. No one actually knows what's going to happen, but we always want to trade. That's why I love this book that I got published in 2008. It's high probability trading strategies. So we always want to get the edge in our favor, so that consistently over time we're making good investments, good risk management decisions, as opposed to just guessing. So yeah, if you like, just like the video, subscribe, hit the bell notification, and comment, if it made sense. If it didn't make sense, what would you like me to clarify? What information would you like from a technical analysis perspective? If it's just fundamentals, what is it that you want? Let me know, and I'll put that in my next lesson. All right, I'll see you soon.